Are you ready for the stock market crash that everybody saw coming? Today we'll take a look at weekly charts of all of the major indices. So first up, let's take a look at the weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. All right. So first up is this weekly chart of SPX, and we can see the SPX has now been consolidating for 2 weeks, going sideways after that very strong push in January. Now keep in mind, anytime the market goes too far too fast, it usually needs to do some sort of consolidation, and that could be some type of pullback through price or some type of consolidation through time where we just go sideways. And we are clearly seeing the sideways consolidation. So obviously when I say this is the stock market crash that everybody sees coming, I'm saying that in jest, because clearly the market is getting more stable and more bullish as we now see weekly higher lows and higher highs, and we are getting this weekly bull trend. You could very simply just look at the moving averages on this weekly chart, and you could see the 20 daily moving average is starting to curl up, and we are starting to see a lot of market momentum in the upward direction ever since the weekly SPX bounced off the 200 weekly simple moving average. Remember, on this channel, I tell you price action above a positively sloping 200 weekly moving average is still a secular bull market. So objectively looking at this chart, we are still looking at a secular bull market until price action slices down through that support and we see it roll over and start to go negative. So it's really objective to say this is a bull trend because we're looking at macro level view. And even though we did have a bear market last year, we have no way to know if that bear market is continuing into this year. And right now the price action is telling us no way. Now, obviously that can change if we see price action slicing down through support and we start to see high volume selling and we start to see a lot of these bullish developments roll over and die. But right now we're not seeing that, and there's really no way you can correctly predict that. So don't bother trying. A lot of you are trying to force your will upon the market instead of simply following what the price is telling you. And right now the price is telling us there is a very good chance we bounce off this support and continue trending higher over the coming weeks. So it's very simple. You should be staying bullish as long as we're above this neckline breakout at 4070 on SPX. And then below that, we still have the support trend line, which is going to be down here right around 3900. So we have a lot of strong support we need to lose before we say we're going much lower. And since we're trading the price action, we're not going to guess that we're going to lose support. We need the price action to prove it. If you don't know how to manage your risk around following price action, you need to learn it, because a lot of you think it's still too risky to buy the dip in a bull trend. But it's actually quite the opposite. If you're shorting the bull trend, you are the one that's taking on way too much risk. The people buying near strong support levels have very well-defined risk, and they can only lose what they're willing to risk below support. So manage your risk no matter what you're trading. If you're trading short or long, it doesn't matter. You need to manage your risk, but you're going to have a much smoother ride if you trade with the direction of the trend, and right now that is still moving higher. Now, another thing I want to revisit, because we talked about this chart many times before this bull run started, is that there's just way too many people that got bearish last year. And if you just look at this chart from macro charts with the Twitter handle in the bottom right of your screen, you can see that called every other major market bottom going all the way back into the 1990s. Now, we had that same exact read last year in 2022, and now we've been rallying off the low ever since. And there's still a lot of you out there that think the market is going to roll over and crash while all of you are expecting it. And I'm telling you right now, you are probably just going to see the market climbing the wall of worry until something physically breaks in the financial system, and then you will see the crash. Who knows how long that's going to take before something financially breaks down, or if it's even going to happen at all, because that is a very difficult thing to try to predict. The broken clock bears will eventually get it right, but you're going to see the market moving in a lot of different directions before that day and time finally comes. So take a picture of this chart and remember, there's just way too many people that got bearish, which likely means we've seen the market bottom, which likely means we could see a bull market this year. Now, just looking at the survey, you can already see we're seeing more people starting to become bullish that are catching on to the bull trend, because nothing changes sentiment faster than price. We have a lot of cash on the sidelines and a lot of people that are going to short the entire rally higher. And you can just look at a stock like Tesla and see why you don't short a bull trend, because that stock just continues to defy gravity and go higher. There was a lot of bears that thought Tesla was going down to $60, and now it's currently trading above 200. So you follow what the chart is telling you. So while sentiment isn't everything, following price action is. And right now the sentiment is telling us there's still plenty of cash and bears on the sidelines that could still come into this market and get bullish before there's enough liquidity in the market to see another capitulation. So next we'll jump over to a weekly chart of the NDX, and you can see the NDX is also consolidating gains, moving sideways, and we have this giant double bottom breakout as long as we're above the neckline at 11,994. And you can tell the weekly Bollinger Bands are the reason price action is consolidating, because we were getting outside of the weekly Bollinger Bands, and that is just way too far extended and we needed to cool down. But now those Bollinger Bands are going to expand and we have higher price targets, which could easily take us up to 13,000 and higher. So it's very likely the NDX is going to start marching higher and climbing the wall of worry. You can see we're above the weekly 50 EMA and the positively sloping 20 weekly moving average, and we're still above a rising 200 weekly simple moving average on this chart, which means we are still in a secular bull market. There's a very good chance the NDX is going to continue climbing higher, and it's very heavily weighted in the SPX, so we're likely going to see the market continuing to climb the wall of worry. On the Dow Jones weekly chart, you can see we're in a giant bull flag ever since we rallied off of those October lows, and now we're consolidating those gains in a bull flag before the next leg higher, and we just had the weekly 20 moving average cross back over the 50 EMA. So we have an official bull trend on the Dow Jones on the weekly chart, and we're getting very close to breaking out of this bull flag. Again, these are very bullish charts, and there's no other way you can look at this chart. We need to see a major loss of support before we can say it's bearish. On the Russell 2000, we also see a consolidation of a bull flag above all of the moving averages, and they're all positively sloping. So again, another bullish chart as long as we're above 1900, and price action is still above 1900 in the Russell. So I continue to see these indices climbing the wall of worry because they're still in bull trends and they're looking very healthy, like they want to continue pushing higher. And then quickly looking at the VIX weekly chart, we can see the VIX has been spending a lot of time below 20, and it's currently sitting right at 20, and we are seeing a lot of bearish momentum in the VIX, as the VIX is likely going to continue crushing down towards 18. Now remember, VIX above 20 is a volatile market, so we will want to see the VIX continuing to crush as these bull trends develop and get stronger. So jumping back over the S&P 500, you can see a lot of these charts are still looking very bullish, and we are strictly doing technical analysis and following what the charts are telling us, and there is nothing on these charts at this point in time that tells us the market is about to roll over and crash. So if you're one of those people that continues to think the market's going to crash, you need to step back and you need to make an objective trade plan that uses price action and manages risk, because simply thinking the market will crash does not mean it will. And the more of you that think the market is going to crash, the less likely it's going to. The market will move to hurt the majority, and the majority of retail traders are still extremely bearish because they just got pummeled last year and they think there's no way the market's ever going to go higher again. And that's why I continue to tell you, just look at this chart and you can see that is exactly how it happens in history. Everybody gets bearish at the absolute bottom, and then the market continues to climb the wall of worry out of the bottom into the next bull market, and everybody doubts that bull market until it's too high for them to buy in and they miss the entire rally. So if you're one of those people that's waiting until it's an obvious bull market, by the time it's obvious, you're going to look at the price and you're going to go, how the hell did I miss that entire rally? Now it's too high for me to buy into, and you're just going to continue to stay on the sidelines or continue to short a bull rally. So just a constant reminder on this channel, I'm going to keep it objective and following the price action and trend. And right now those are bullish, so we need to remain bullish at this point in time. Also, don't forget I have two services to help you out in this market. I have the Stocks Channel Trading Discord community, and I have Bank Trade Alerts. And Bank only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. So if you need help in this market or you want to come trade with the community, you can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.